Good morning, everyone. Once again, it's Black Forest coming in with another pre-market analysis video. This morning, we're going to be looking at the Euro USD. But before we get to breaking down this Forex pair, we have to state that this video is for educational purposes only. This is not financial advice, but we know why you guys are here. You want to find good Forex financial content that can help improve your ability as a trader. So with that being said, let's go ahead and get started break down this currency pair. So let's talk about the fundamentals first. The euro is one of our weaker currencies heading into this trading week, along with the USD and the JPY. The reason being that is that the overall European Union, overall EU, the European Union, all its respective nations are suffering from heavy inflation, from the economic measures it had to take during COVID. Also, the EU is getting a rippling effect of the sanctions being placed on Russia, so the whole overall European economy is being affected. I don't think before they were so quick to sanction Russia that they really taken to play how these sanctions that were placing on Russia was also going to have a rippling effect on the entire European economy, the entire European continent's economy. So this is kind of what we're seeing right here, right now. Okay, because this was the opening of the trading week for the euro. We've been going down thus far, still looking like we're going to precipitate going down. Okay, and we also know that the USD has been inherently weak due to the overall inflationary dark cloud that's been hanging over the US economy, which has caused the US dollar to suffer. And we know there's also due complexity heading into this trading week, as throughout this European conflict between Russia and Ukraine, the US dollar has acted as a safe haven currency non-traditionally. Traditionally, it is not a safe haven currency, but it has acted as a non-traditional safe haven currency throughout this Russian-Ukrainian conflict. Okay, so please keep these fundamentals in mind before you place your respective trades on either currency, because you don't want to be caught into a bad position. All right, now let's look at this from a technical analysis standpoint. As we can see, we've been going down, and now we have slight retracement up. So what possibly is going to happen is we're going to push up ever so slightly into this last consolidation area here before we start to aggressively go back down again. But if we do have a fundamental shift in which the USD starts to become weaker and the euro starts to become stronger, then we will have a push up. Okay, but unless that happens, is it possible? It's possible. Is it probable? No, not really. So, what I would look for is just the retracement, push up and go down. But if we do have that fundamental shift, what we're going to do is we're going to push up, range out here, and then break the range and continue to go over if we're going to have price turnover. So when you're going into these trades, you always want to have a plan A and a plan B for if the trade does not perform the way you predicted, the way you think it's going to be. All right, so keep that in mind when placing these trades. Hope that information was helpful for you guys. Happy trading.